Good afternoon, and thank you for joining us today for our virtual town hall, Florida's Perfect Storm, Extreme Weather and Insurance. My name is Lisa Garcia, and I'm with Sachs Media in Tallahassee, Florida, and I will be the moderator for today's town hall. We want to thank our hosts, the Fair Foundation, for sponsoring this event, and to learn more about Fair Foundation, please visit them at fairfound.org. Today, we will hear from nationally renowned weather, insurance, and emergency management experts to address the relationship between Florida's extreme weather, natural disasters, and the rising cost of homeowner insurance. The panel will take questions after their statements and discussion. Para medios en español, van a tener la oportunidad de preguntar sus preguntas en español to John Morales. Today, our panelists include J. Neal. J. Neal is the president and CEO of the Fair Foundation and executive chairman of the Federal Association for Insurance Reform. Jay has over 30 years of experience in insurance and finance as a consultant at CEO and agency principal level, including commercial real estate lending, real estate capital markets, reinsurance, and development of retail insurance products. Fred Karlinsky is co-chair of Greenberg Traurig, Insurance Regulatory and Transaction Practice Group. Fred has nearly 30 years of experience representing interests of insurers, reinsurers, and a wide variety of other insurance-related entities on their regulatory, transactional, corporate, and governmental affairs matters. Fred is a recognized authority on national insurance regulatory and compliance issues and has taken leadership position in many insurance trade organizations and is a sought-after thought leader who has spoken and presented to insurance executives and governmental officials, both nationally and internationally. Craig Fugate served as FEMA administrator from 2009 to 2017. Previously, he served as Florida's emergency management director from 2001 to 2009. Craig led FEMA through multiple record-breaking disaster years and oversaw the federal government's response to major events such as the Joplin and Moore tornadoes, Hurricane Sandy, Hurricane Matthew, and the devastating effects of the 2004-2005 Florida hurricane seasons, Charlie, Francis, Ivan, Jean, Dennis, Katrina, and Wilma. Craig currently provides senior level advice and consultation in the area of disaster management and resiliency policy through Craig Fugate Consulting. John Morales is the longest tenured broadcast meteorologist in South Florida, serving as a reassuring television presence for nearly 3 decades. His tropical weather acumen guided South Florida viewers through Hurricanes Andrew, Irene, Katrina, and Wilma, and most recently, Hurricane Irma. For his life-saving work during the 2017 season, John was recognized with the John Coleman Broadcast Award at the National Tropical Weather Conference. He has twice been appointed to the National Academies of Sciences committees and wrote Huracanes, a Spanish language reference book on hurricanes. In just a moment, we will hear from Craig Fugate, who will lead off our panelists' statements pertaining to their particular areas of subject matter expertise. Each panelist will give about a 5-minute opening statement, which will be followed by a brief discussion among panelists. We will then take questions from attendees. This is a public event that is being recorded. We're collecting questions from attendees through the Zoom's question and answer feature, accessible through the Q&A icon on the black bar located at the bottom of your screen. Please submit your questions and we will get to as many as we can. Please note your name and organization affiliation with your questions. If we don't get your questions during the event, we will do our best to coordinate a response via email after the event. Now it is my great pleasure to introduce our first panelist, Mr. Craig Fugate. Craig?
Thanks. Florida is no stranger to extreme weather events. Throughout the history, much of Florida has been defined by these events, from hurricanes to freezes to wildfires. But as we've seen with climate change, these events seem to be increasing in frequency. The intensity seems to be increasing, yet our infrastructure and much of our tools that we use to manage these events were built upon the past. And a couple areas I really want to focus on as this forum's about insurance is a misconception that a lot of people have that when disasters are really bad, the governor will ask the president to declare a disaster and there'll be a federal disaster declaration, and FEMA will be coming in. And I think too many people think that FEMA is going to come in and take care of everybody. And that's not how Congress designed the disaster programs. They're actually based upon the needs of those survivors. And the first line defense that FEMA looks for is insurance. And it's again based upon people having insurance, being able to take care of their immediate needs. FEMA then turns to those that didn't have insurance. And again, it's based upon needs. So the first offer that most people may see is a Small Business Administration disaster loan. And they're going, why am I getting a disaster loan? I thought FEMA was going to pay for everything. Again, Congress did not build the program to be a program where everybody gets assistance. It's based upon need, and it's a hierarchy of needs that if you have insurance, your needs are met with insurance. If you don't have insurance, but you have the ability to repay a loan, then Small Business Administration disaster loans are made available through that FEMA disaster declaration. It's only if you didn't have insurance and you had uninsured losses that you didn't qualify for the loan that FEMA may be able to provide grant assistance. And that grant assistance is very limited. Most people hear the number of how much the total amount could be, $30,000 to $35,000. The reality is it's not based upon you get the full amount. It's based upon the impacts to your family, the head of household, and it's generally much lower than that. Average outcomes for many disasters is probably closer to $6,000 to $8,000 range. Talking about flood damages, which tends to be one of our more uninsured losses. So I think it's really important as we talk about Florida, who sits, as somebody once said, we're the sore thumb that sticks out in Hurricane Alley. We're going to get hit. But it's not just hurricane season. It's severe weather season, tornadoes, it's floods, it's wildfires. It's even the freezes that we saw in Texas. I remember back when we had our own generator capacity shortfalls and rotating blackouts during extreme cold events in Florida. And that's why insurance is so important. And the last thing I want to focus on is flood insurance. Historically, the Federal Emergency Management Agency, or FEMA, was the provider of flood insurance through the National Flood Insurance Program. But Congress has been concerned about the increasing debt that that program has and has directed FEMA to begin to address that. There are notices coming from FEMA that flood insurance could be significantly increasing for a lot of people that live in high-risk areas. And that's going to cause a lot of people to be concerned about having flood insurance or foregoing it. And if the FEMA programs are not going to make you whole, what does? And it is insurance. And this is true in Florida. It is true across most of the nation. Probably the biggest gap we see in insurance is people who do not have flood insurance. And they often hear that I don't live in a flood zone, I don't need flood insurance. Well, when you're dumping feet of water, as we've seen in these hurricanes, most of Florida will flood. And being in a flood zone is really a misnomer. That's actually a designation for flood insurance in a special risk area where generally it's required if you have a federally backed mortgage. But if you don't live in that special risk area, it doesn't mean you don't flood. It's an insurance rate. Actually, if you live outside of those zones, insurance cost for flood insurance is much lower. But in general, your homeowner's policy will not cover any damages caused by rising water. And this is the most uninsured risk people have that they could address now. And that is to talk to your insurance broker about getting flood insurance. And don't let anybody tell you you don't live in a flood zone. A better question is, can you rebuild your home, your life, with only several $1,000s in federal assistance if you don't have flood insurance? So as we go into hurricane season, as we face more weather extremes, I want everybody to understand FEMA was never designed by Congress to make head of households or families whole after disaster. Insurance is still your best line of defense. And the most vulnerable part of this for most homeowners has been the lack of flood insurance. And so I urge you, even if you think you don't live in a flood zone, you've never flooded in your life, you should consider flood insurance as part of your financial preparedness as you get ready for disasters. Thank you.
Thank you, Craig. Next, let's hear from Mr. John Morales.
Thank you. I'm going to start off by reading the beginning of a column that I wrote for the Bulletin of the Atomic Scientists. It posted on Friday. It's specifically on the Texas situation with the extreme cold weather outbreak there. But let's think about it a little bit in broader terms, in terms of the changing climate and some of the extreme weather events that Craig just mentioned. So it goes like this: a natural disaster is calamitous, a man-made disaster is infuriating, and a disaster driven by negligence is despicable. Now, of course, I go on to explain some of the things that went on in Texas and how unprepared they were for the cold weather outbreak. Well, how prepared are we for the more extreme weather events that are already on display around the country and around the planet, being driven partially or sometimes mostly by the warming planet? Let's look at Florida specifically, and I'll start off very briefly by mentioning something that relates much more to health insurance than it does to homeowner insurance. But I think the most easy change to comprehend in regards to climate change is increasing heat. The number of days with heat index values here in Florida that will exceed 105 degrees, which is considered a dangerous level, that number is already increasing and projected to increase tremendously towards the middle and latter portion of the century. These changes hit frontline communities the worst. They already usually have underlying health conditions, which are exacerbated by the increasing heat. Many folks in frontline communities can't afford to even turn on their air conditioner if they have one. So that's one extreme that is definitely is already and will continue to affect our state. The increasing propensity for extreme precipitation, where we're seeing the number of days with a high amount of rain, excessive rain happening with greater frequency, really all around the US. In the southeastern US, it's a 27% increase. And of course, in Florida, you might recall some of the recent events that we've had, including just recently in the last few months in October and November with Tropical Storm Eta, but also events that happened after Eta that were not necessarily related to that tropical cyclone, which also yielded incredible rainfall amounts, and it turned out to be a 1 in 1,000 year event, with all the pitfalls of saying 1 in 1,000 year event. But I'm sure many of you understand that it was what's considered a rare event, but it seems to be happening with greater frequency. Addressing hurricanes, peer-reviewed research indicates that a greater proportion of the tropical cyclones around the planet are reaching extremely high wind speed intensities. So many more cyclones are reaching category 3, 4, and 5. And these are the ones that emergency managers are most concerned about, and of course insurers too. Fine, a category 1 hurricane is something to not sneeze at, and you prepare for those and you prepare for the power outages. But the catastrophic type of events come generally from the major hurricanes, the category 3, 4, and 5s. And while the total number of tropical cyclones around the planet is not increasing, this is despite our crazy 2020 in the Atlantic Basin. Okay, so I don't want you to think of 2020 in the Atlantic Basin and the 30 tropical cyclones that we had as necessarily being linked to the changes we're seeing in the climate, because that science is not clear as far as the number of storms is concerned. But the science that is clear and that has been peer reviewed is that a greater percentage of those cyclones are reaching these extreme intensities like Dorian and Irma and Harvey and so on and so forth. So that is definitely a big threat for Florida. Miami hasn't had a quote unquote big one in almost, other than, of course, I'm talking about downtown Miami, not talking about the suburbs. But since 1926, frankly, when we had a category 4 move through the core of the city. And it's only a matter of time. And of course, finally, I'd be remiss if I didn't mention sea level rise. The city of Miami, as measured in Virginia Key, has seen a 6-inch increase in our sea levels here in the course of just a quarter century. So when you look at the overall rise in sea levels around the planet over the last 100 years, and you think of, okay, 8 inches, 9 inches, well, here in Miami, that value is much higher. And there's many reasons for that. The Gulf Stream, one of them, the fact that the waters here are so warm and you get a thermal expansion of the local waters, amongst other reasons. But sea level rise around the world is increasing, accelerating, in other words, in the pace at which it is increasing. And that here in South Florida is already being reflected in a huge increase in the number of what they call nuisance floods, sunny day floods, floods caused by high tides, which used to be confined to only 1 or 2 days every few years. And now it's a high number of days every single year, especially in the fall when we're closer to our king tide season. I think I've reached my 5 minutes, so I'll stop here and we can always discuss further in our discussion.
Thank you so much, John. Now we'd like to hear from Mr. Karlinsky.
So thank you very much, Lisa. And one of the problems with going after two great speakers like Craig and John is they're difficult acts to follow, but the good thing is you get a lot of material from them that you can feed upon, and so I'll do that. But in all seriousness, thank you both for your service. You've done a lot to keep the citizens of the state safe, and we appreciate it. I know the same holds true for Jay and the work that FAIR does. So let me mention a couple points that I think are in the insurance sphere, but will also transcend that. So the first thing I would say is, as it relates to hurricanes and severe weather and what we've seen over the course of time, it's important to prepare for the worst and pray for the best. And while that may seem trite, I think it's the reality. The other thing I sort of live by when we're talking about storms and severe weather, and frankly, it holds true in COVID and some other things, and this is a statement that I use all the time, that's why they call it a disaster. So let's break both of those things down just a little bit as it relates to Florida and insurance and where we are. And so Craig did a really good job at talking about the NFIP and what that's all about. And the NFIP is a program that was put in place in a pay me later, if you will, structure. It has been woefully underfunded since the beginning of time, and it's been underutilized too, which is also a problem. And so one big takeaway is you need flood insurance. The good thing is Florida has the largest uptake of flood insurance in the country, but it's still not enough. And many people don't realize that flood insurance through the NFIP has a very low limit. And so you might need excess flood insurance in order to cover your property, especially in a place like Florida. But the federal government has the ability to tax us and has the ability to do certain things and print money versus what the state can do. And so the NFIP has been woefully inadequately funded, and through premiums. There was an intent in 2012 to basically make the NFIP an actuarially sound program. That got rolled back almost immediately, and now we continue to have an underfunded system, but it's at the federal government level, and they've got different things that the state can do. The state has to have a balanced budget. The state can't print money the same way. And so in Florida, we do have a couple of defensive mechanisms here. We have the Florida Hurricane Catastrophe Fund, and that is our state-created reinsurance pool that, in effect, is a check and balance on the reinsurance industry, because the reinsurance industry is not as regulated as the insurance industry. We also have Florida citizens. When the lack of availability for insurance is out there in the private market, citizens can act as a safety valve for that marketplace. But those are both systems that are pay me later systems. And while they both have tax exempt status, which allows them in good years to bring in, to keep the dollars that they bring in through premiums. At the end of the day, those systems are masking a system in the state of Florida. And this is not going to be a popular type of thing to discuss, but where premiums are probably underpriced somewhat. And I know that's a tough thing to sell to people on fixed incomes. It's a tough thing to sell when premiums go up. But one of the things I would say, and John talked about this a little bit too, there are things we can fix and there are things we can't. And so the natural disasters, whether you think that wind turbines in the water making it cooler will do anything, at the end of the day, we are where we are. And we are where we are on climate issues and the word resiliency, and I want to get back to that word in a second. But some of the man-made things that we've seen over the course of time, and what I would consider those man-made things to be, are fraud and abuse of the system, including but not limited to claims that should not exist. I mean, we all got, if you lived in Florida at the time that the Irma deadline for claims was passing, you all got letters in the mail, even if your house didn't get hit, saying, we'll give you a free roof, we'll give you a American Express gift card to put on a free roof. And that cost each and every one of us, and it cost us dearly. And so part of what we need to deal with, even though we're dealing with natural disasters, is deal with the man-made disasters and the man-made problems that are attendant to those types of things that frankly are a shock to the system. You know, interestingly enough, the insurers understand how to price for and rate for the natural disasters. They understand that. And while people may not think they like paying for those, and they probably don't, we probably don't, at the end of the day, that's what they're in business for, and they get it. And if there's a natural disaster, they want to pay that, and they want to pay every claim on that as well as they can. It's when you get into these man-made situations where a roof doesn't need to be replaced, yet it's replaced, or some other supposed damage, if you will, that really the system gets out of equilibrium. As far as where we are as a state, you know, I'm actually glad we're talking about resiliency, because I think the words climate change had some political undertones that half the population liked and half the population didn't like. And I can't really explain or understand the weather as well as someone like John can, although even on his best day, he probably gets it right, 75% or something like that. I mean, at the end of the day, let me say this. I saw how homes that were fortified because of the Florida State Building Code fared in the 2004 and 2005 hurricane seasons. And if you had two homes that were next to each other, the one that was fortified, the one that was built or retrofitted up to the building code standards, was a lot better. I've seen how dealing with stemming the tide, if you will, of rising sea level, if you can do something about it, and it, you know, it's man-made solutions can help. And so those types of things that we're doing under the moniker of resiliency, to me, are critical. And let me also say this: while, you know, I think there's reason to be concerned every, you know, June 1st through sometime in November in the state of Florida, I actually feel like we're a lot more ahead of most states, and we've really tried to do things the right way with our mechanisms, with the CAT fund, with Florida citizens, with our building code, and with the resiliency that we've tried to put in place. So, you know, I think this is an important discussion. It's one that we continue to need to have. At the end of the day, as was mentioned, we are the thumb that sticks out. We are Hurricane Alley. We have 80% of the United States hurricane insurance risk here, and we need to start thinking about the best way to move forward. And that includes meteorologists, it includes disaster preparedness professionals, it includes the legislature, but it also includes making sure that the citizens of the state of Florida and stakeholders understand exactly what we're talking about and understand some of the perils and pitfalls that we're dealing with on a daily basis.
Thank you, Fred. Last but not least, let's hear from our host, Mr. J. Neal.
Thank you, Lisa, Ryan, Sue, and the Ron Sachs team, and my good friend Ron Sachs. You guys are a quality outfit. And thanks to the other panelists too. The points you've all covered have been outstanding. You know, I want to address why your property insurance rates are going up. If you haven't already seen the rates go up, it's likely because you pay your homeowner's insurance through an escrow account, and they've increased your rates. You probably didn't notice, didn't think about it, and your escrow account sooner or later is going to have to adjust for basically the past year where it was short, and the coming year where the rates have gone up. So here's why that's happening. We've had multiple, Fred mentioned the fraud and abusive litigation, and that's a huge problem. And as a consumer advocate who will go to my grave protecting the access that consumers have to the courts, it's obvious. In fact, it's happened to me. I got a mailer, my neighbor who's a mild-mannered guy, well off, got a mailer. It had a picture of my house and it said, "You have Irma damage." And then it offered a free lunch to the Capitol Grill, which is kind of a swanky place. And it, just for doing a free inspection. And they climbed up on the roof and they said that the roof was a mess and it, that there were many broken tiles, et cetera, et cetera. And fortunately, I had a legitimate roofer scheduled for the next day who climbed up and was able to assure me and my neighbors both that our roofs were okay. So that is a problem of two things. And it's also a solution. One is we've got to enforce, we've got to crack down on these folks. And there are a lot of mechanisms within the code to do that aren't being utilized. There are also some changes that need to be made to the statute. And our team, with our sister organization, FAIR, tries to work on a basis of balance and narrowly tailored solutions to problems. So we have a rather robust property insurance committee that includes attorneys who work on both sides, that includes insurance company executives, public adjusters, everybody involved in the problem. We try to find narrowly tailored solutions. So the legislative session is getting ready to start, and some of those will be proposed. Another problem that we have is our domestic insurance company market, which at Hurricane Andrew represented just a tiny percentage, and is now somewhere around 70%. Give me a plus or minus 5, is having a tough time. There are, and to have, Fred mentioned citizens, we had citizens up to over 1.5 million policies, down now to 500,000, but every indication is that if we don't take some measures at the state level, we're going to see that balloon up again, and that's not good. So we've got to do things that make sure that and let me give you one reason why we had 30 storms out of the Atlantic, I think, last season. And think of your deductible at home. Homeowners insurance companies pay about 40 to 50%, closer to 50% of the premium you pay them. They turn around and buy reinsurance. That's the only way that they can be in a financial position to have enough claims paying capacity if we really get whacked in a year. The thing is that the reinsurance has deductibles, just like your homeowner's insurance policy. So imagine if you had a little kitchen fire and a leak in the bathroom and 4 or 5 different events. What would you have? You'd have 4 or 5 different deductibles. So but if you had a huge event, you'd have just one deductible. Well, that's something that the carriers have experienced. That and the abusive litigation, and then the last factor is reinsurance cost. I mentioned 40 to 50%. Reinsurance doesn't like uncertainty, and climate change and the other things that are happening, not just in the Florida market, but in cat risk markets throughout the country, are driving up reinsurance costs. And so those factors are really making your rates go up. So if you haven't already noticed, and you have a private homeowners policy in Florida, you're going to see increases, and that may last for a while. What are the solutions? I mentioned enforcement. It's already been mentioned, the resiliency and mitigation. If you have an old roof, or if you have windows that haven't been updated, And you should really check on what that's going to save you from state mandated discounts on your homeowner's insurance policy. If you have trouble financing that, there's a program called Property Assessed Clean Energy. It gives you a long-term fixed rate that'll cover those costs. And then one thing that's hasn't been politically popular, and I really, is reforming the CAT fund. I mean, we had previous legislators, and nobody that's around today knows about all that because the term limits. So they all came here after all that happened. But we have mechanisms in place to lower reinsurance costs, even if temporarily, for the homeowners companies, that is then passed on to the insurance consumer. And that just hasn't been politically popular for a lot of reasons. A lot of it is that the reinsurers don't want it to change, and some of the companies that are national that really have been on a glide path out of Florida, don't write as many policies, have reinvested some of that capital into reinsurance. So, and their interests are very strong in Tallahassee. So those are areas, and I don't know if I have any time left, but I want to say just a little bit about what was mentioned about uninsured risk. This is a problem. Flood risk in Florida is grossly underinsured. And if you want to understand your risk, there's a new tool, and it's pretty cool. It's the First Foundation teamed up with Realtor.com, and all you got to do is put your address in and read a report about your flood risk, and it even rates it on a scale of 1 to 10. And this is not just a problem that's Florida-based. I mean, we have massive problems with uninsured risk for flood around the earthquake. I didn't even mention earthquake. And the new emerging risk, which I know Craig has a concern about, is the firefires, the wildfires. And all these are going to be problems in the future. And don't think that they won't affect Florida, because we are so reliant on reinsurance, and those problems in other places are definitely going to affect us. So I want to thank you for your time. I hope I didn't go too far over the 5 minutes.
Thank you, Jay. That's a host prerogative.
Okay.
No, but Fred, if I'd like to go to you and see if you have any reaction or questions for Jay before we go into responding in general. Do you have any direct?
No, I think Jay and I were saying a lot of the same things. And we've had this dialogue before. I do find it interesting that some of the stakeholders that he's including in some of these discussions really are unnecessary to the discussion, in my opinion. I mean, you don't let bank robbers into a discussion about bank safety, and that's what we're doing with some of these folks here, because what boggles my mind is when people try to pit folks. And look, insurance is not selling candy and selling American flags and Mother's Day cards. I get that, but at the end of the day, the goal of the insurance companies is to work things through. And I think what's happened is you have such uncertainty out there because you have these extraneous players in the marketplace saying, well, we need to take care of these folks. We need to look out for them. When in reality, what they're doing is raising the cost significantly of doing business. At the end of the day, my view is we need to get this issue right. I mean, if you think about it, Florida in particular is a state based on two things. It's based on hospitality, and that's in large part due to our weather and the environment we have here. But secondly, it's based on real estate. And if at the end of the day we can't sell homes and homes won't flip and people won't move here because of insurance, then that's not a good solution, and that's not a good situation for one of our largest economies in the state to be in. And so I think we need to look at this problem and say, you know what, we need to work with the insurance companies, we need to work with the cities and the counties, we need to work with the home builders, but some of the folks that are just increasing the cost in the system, maybe they need to look for something else to do versus to try to feed upon that system.
Excellent, thank you. To all of our panelists, I'd like to give you the opportunity now to take a few minutes to discuss your perspectives while we queue up questions from our attendees for you.
Yeah, I'd like to make a comment. You know, there are, I mean, there are two camps. There are people who think that the FAIR model, which is unique, which doesn't always work, but what works a lot, where you try to put everybody at the table, even with disparate views. We have to realize that within segments where abuse is coming from, there are also good players within that segment. And so we try to associate ourselves with the good players so that we understand what's really happening. But I understand Fred's perspective. You know, we'll go on. I think that under 90% of the circumstances, we're in agreement as to what happens. Sometimes the label that you wear when you go in front of the legislature, if you're an insurance lobbyist, it's sometimes harder to make a point effectively than if you come from a consumer-centric organization and they don't attribute direct economic motive to you. So that's a battle we'll continue to fight. But I will say this: over half of the premium written in Florida by the private insurance companies, they're FAIR members. They contribute and are part of FAIR. So.
Craig, did you want to say something?
Well, I just like, you know, the challenges of talking about climate change. I like to remind people it's actually climate change with a D because it's already changed. And our infrastructure, our building codes were built upon the past. And even though we hold Florida's building code as a model, it's still not as good as it can be. We've seen programs where insurance funded Institute of Business and Home Safety has looked at how to even go above our codes to improve performance in these extreme weather events. But this is the reality that Florida faces. The cost of living here is not going to get cheaper. And this is going to create winners and losers. And I think this is where the legislature really needs to get this balance between those that can afford the risk ought to be paying for it. But we also need to address our communities that were built prior to these changes that are lower income, fixed income, are not going to be able to adjust as the changes are occurring. And our federal government has a role to play here, but a lot of this will come back to the Florida legislature. What are the tools and levers they can produce, not just to keep rates low, which is what everybody would like, but allow rates to move in a direction that we're pricing risk for what it costs. So we drive development and community investment based upon the true cost of that risk, not subsidized, but also look at not leaving behind our more vulnerable parts of the community. It's a delicate balancing act, but it's one that Florida has shown that after Hurricane Andrew, the steps it took to provide insurance to keep the insurance heroes, the tools they built, we can do it. But it means we have to get past this idea that these are, a term black swan events. They're once in a lifetime events. I've been doing this so long that 100-year events seem to be weekly events. 1,000-year events seem to be monthly events. And we're seeing, and this is the thing I keep trying to remind everybody, every time you hear somebody saying we're having a record-setting weather extreme event, it generally means that everything from our grid infrastructure to our building codes to our insurance programs weren't built for it. And it means these systems are going to have to change. And that means, yes, rates will be going up. It will cost more money. But it doesn't mean we cannot build and develop. It may mean we may not be building in the same places the same ways we've always done. But it should mean that we lose the ability to grow and sustain our economy. And so I think the term resilience is key. Doing what we've always done and hoping for a good outcome is not resiliency, it's just foolishness. But Florida should be leading the nation as one of the bellwethers of the impacts of climate change and looking at how we have a resilient economy. But we also have to remember not to leave our most vulnerable behind and strike a balance between pricing risk for what it costs for those that can afford, while at the same time maintaining the communities that are not going to be able to pay for these increasing costs. Were often built decades before even some of the more current building codes and are extremely vulnerable to these disruptive weather events.
Thank you, Craig. Before I go to questions, John, did you have a statement?
So I just want to briefly clarify. You know, thinking of climate change as a politically charged term is so 1990s. Yale University does a tracking survey every year And the percentage of Americans that are dismissive, doubtful, or disengaged about climate is down to 1 in 4, down to 25%, while the percentage of Americans that are concerned or alarmed is up to 55%. The other 20% fall in an area called cautious. They're cautious about it. Like Craig just said, I mean, the climate has already changed. Yes, I understand that the climate can change over eons, but what's happening right now is happening at a pace that has not been observed in the past. And it's happening because of anthropogenic reasons, because of man-made reasons, our injection of greenhouse gases into the atmosphere. So that's basically a scientific fact. Now the debate is, how quickly can we mitigate to try to slow this train down and, try to keep the warming under 2 degrees Celsius, preferably at 1.5 degrees, but, we're already 1.2 degrees along. So it's going to, it's going to be very, very difficult to stop at 1.5 degrees, or for that matter, 2. And if the changes that we're already seeing in terms of the extremes, whether it's droughts developing faster or heavier downpours that are leading to easier developing flash floods, and the effects that has on our infrastructure, if that's now at 1.2 degrees, you can only imagine what it's going to be at 2 or 2.5 or 3 or 4, if that's what we'll reach by the end of the century. And that's all being reflected, of course, in the reinsurance market. Why are reinsurance rates going up? Because they know, and they're following the science. One more thing, Craig also said, it's becoming more expensive to live in Florida. Here in South Florida, it's just becoming more difficult to live overall. Lifestyles are being affected. People who haven't seen flooding in their neighborhoods are now seeing, really, really serious floods that are penetrating businesses and homes, causing tremendous amounts of damage. And that's only going to increase as the water table is higher, the downpours are stronger, and of course, with sea level rise, all that continues to head in the wrong direction. This is becoming a difficult place to live in. And the repercussions long term are going to be very serious. I think we'll see the economic cascading effects well before we see the water lapping up at Ocean Drive. So that would be my statement.
Thank you, John. All right, I have my first question, and it's going to Fred Karlinsky. Fred, how can companies prepare their customers for the increasing climate extremes we expect to see in the coming years?
Well, look, I think communication is the key. And, I agree with what everyone said about dialogue and, the adding of the letter D to climate change. And I would just add that, the climate's going to continue to change. And as John just pointed out, we're going to see flooding where we didn't see it before. And so I think companies explaining to policyholders better and policymakers doing a better job at having folks understand. But in a lot of ways, it goes back to what Craig said, which is folks need to realize and be sensitized to the fact that at least in this particular issue, Florida is going to become more expensive in resiliency matters, in infrastructure matters. In order to make sure that we're doing things the right way, things are going to be more expensive. And that's, look, even if people are saying that message, it's not one anyone wants to hear, right? And so you sort of turn it off a little bit. And we've been pounding this drum for quite some time now. So I think communication, dialogue is the key. Forums like this are as well. And having people understand potentially what's possible for them to do to try and mitigate that damage if it's at all possible.
Thank you. Thank you, Fred. And as a follow-up, what steps should Florida's congressional delegation take in Washington to better prepare for our state's future?
Well, if that was a follow-up to me, I'd say there's a couple things. out there. I mentioned taxes earlier, insurance companies and other interests that are insuring homes in Florida are not allowed to, on a tax-free basis, reserve for catastrophic losses. So if they have a good year, they pay taxes on those dollars, and in a bad year, they just take those losses. And so that's one way. And that's one of the reasons why the CAT fund and citizens are able to accumulate more wealth. The other thing that's being bandied around, that has been bandied around for a while, and this is something similar to, John mentioned earlier, health insurance, the health savings accounts, potentially allowing people on some preferred or tax-free basis to save dollars for either mitigation or for a rainy day, so to speak, when there's a storm. So I think those are some of the things that can be done. You sort of get torn on something like the NFIP. On one hand, it is absolutely necessary and it's the right kind of program to put in place. But on the other hand, when they went down a path of saying we should be actuarially sound, and they did go down that path, they completely reversed shortly thereafter. So I think we need to have real adult discussions about these things and understand science and understand economics, and they don't lie. I mean, they're pretty clear, and it's pretty clear that the NFIP needs more premium in it. And so that, to me, is something that I think we do need to do a better job at educating people all around.
Thank you, Fred.
Mind if I follow up with that?
Yes, please.
Florida is really an exceptional example for the rest of the country. There are things that we've had to grapple with here that can be lessons at the national level. And that's what I would tell our congressional delegation. For example, when we wanted to get citizens to, better actuarially sound rates, we put a glide path on. That's a huge concern for legislators in New Jersey, in Louisiana, and other places. We could do a glide path for increases on the national flood insurance policy. For us to get to where we need to get in terms of closing the protection gap with flood insurance, instead of being at 5.5 million or wherever we are now, we need to be at north of 40 million. And in order to do that, you're going to have a private market that comes in as well. And we have that in Florida. That has emerged and has grown exponentially. And a lot of those policies are endorsements to your existing homeowners policy. So the confusion that people have, do I need flood insurance? Or, and the fact that a lot of agents don't offer it, it makes it easier all the way around. There are also smaller things. The California Earthquake Authority has grants for earthquake mitigation. They learned that because those grants come from the state and not from the federal government, they're taxable. So we have a bill in at the federal level that would change that, so that money wouldn't be taxable to the recipients. So there are big things and small things. We call it continuous coverage in the National Flood Insurance Program reauthorization, which has been reauthorized to this September 30, the end of the fiscal year, so that we can reward insurance consumers who stay insured for flood, regardless of whether it's at the private level or at the government level. So there are a lot of different things, and any of the congressional delegation and they're on the line, give us a ring. We'll give you a full briefing.
Thank you, Jay. John, since you've experienced, or you live in South Florida and you've experienced the inundation of water on sunny days, have you given thought to how Miami can best start handling the water?
Well, as you know, the appetite for spending on adaptation has evolved to the point where people are willing to take on this, proxy for a carbon tax, because, that's really what it is. In Miami Beach, for example, people pay extra on their water bills to be able to support the bond issue that has allowed for Miami Beach to raise roads in some locations and install these very costly pumps to remove the water from some of the streets. Here in the city of Miami, a bond issue was also approved by voters that includes a good deal of adaptation measures. And of course, now we're hearing a lot more from Miami in terms of mitigation, which is good, because actually mitigation should have come before the spending on adaptation. But we have to do both, because there's no escaping, of course, what's already happening and what's already baked into this cake that will happen down the road. Listen, there is no solution at this time for stopping the water. You might have heard about the project from the Army Corps of Engineers that includes proposed walls that could be as high as 15 feet along a good portion of Miami. This so-called Back Bay project, which now has some proposed changes to it from Miami-Dade County, is intended not for sea level rise directly. It's intended for sea level rise indirectly, because what those walls are going to be for, walls and other measures are going to be for, is to stop the higher storm surges that come as a result of a higher sea level, a higher base sea level when hurricanes come on shore. But what people have to realize is that, yeah, you can try to protect against a storm surge, but the fact that the water continues to rise in the ocean that surrounds southern Florida is, again, without any novel geoengineering solutions, basically unstoppable, because what lies beneath where I'm sitting here is porous limestone, which the limestone simply, unlike bedrock, for example, the limestone cannot stop the water. So whereas in the Netherlands, they're able to build dikes along the shore to keep the water out. And even though they're near or below sea level in some locations in the Netherlands, well, what lies beneath them is not porous, it's solid rock. So building dikes does keep the water out. The proposed gates to New York Harbor would also work, because what lies underneath New York and New Jersey is also a solid rock and not porous. So if you're asking me for a long-term solution, right now it does not exist. Short-term solutions are very pricey. And I think we're starting to see, as I mentioned before, some of the repercussions of the water affecting properties here much, much earlier than we see the worst of the water, which might not come till later in the century. But I think mortgages, home prices, mortgages will be at risk, because banks may not be willing to lend out to 30 years, or they may not find, at some point, insurance may not be able to be purchased here against water. You guys are the experts on that. But so if you can't have insurance on your mortgage, then you can't have a mortgage. And how does that affect the realty market down here? Studies have indicated out of Harvard and other universities that some of the pricier properties here in South Florida, the ones that are normally near the ocean, that there is negative pressure on those home values because of the water. And again, economic repercussions will come well before. So that's the long answer to that question, but the short answer is there is no long-term solution unless someone invents one.
Thank you, John. And just to stay within the hour, Craig, we're going to give you the last question here. Do you see any places in the country that are better prepared for natural disasters that result from extreme weather? And if yes, what are those communities doing?
That's the problem. There are very few areas that have built their infrastructure for what's happening, and the disasters are just increased. Florida's probably done more with the building code. And as was pointed out in 2004, you could tell when a house was built by whether it had a blue tarp or not. It was that clear. And while we're talking about costs are going up, I think what's important to note is some of this on new construction is incremental. The Institute for Business Home Safety has found that for a lot of things we could do to mitigate against extreme weather is adding 5 to 6% to the base cost of the home at construction. Retrofitting is much more expensive, and having a home destroyed or not insurable is just not feasible. So it isn't that it's not as, there's not things we can do. but it does mean doing what we've always done and hoping for the best is not going to build a resilient Florida. It's going to be a combination of engineering. Congress has provided new tools. They've created a revolving loan fund that FEMA is going to administer for the states to begin capitalizing mitigation. There's improved funding there. Hopefully there'll be a infrastructure package in Congress to talk about in a couple of months that could also provide more investments in building to future risk. But in the short term, this year hurricane season, get your home inspected, update your insurance, buy flood insurance, and take those steps now to be prepared before storms strike. Longer term, this isn't everybody in Florida is going to have to figure this out. This isn't going to be solved by anybody else. It's not going to be solved by the Florida legislature by themselves. It's not going to be solved by the insurance industry by themselves. As was pointed out by Jay, this is going to be a team approach if we're going to be a resilient Florida in the face of weather events.
Well, thank you, Craig, and thank you all of you for joining us this afternoon, and our deepest gratitude to our panelists today, Jay Neal, Fred Karlinsky, John Morales, and Craig Fugate. To the media, don't forget to submit your questions via email if you didn't get yours addressed during this event, and we'll get back to you. If you would like a recording of today's event, please let us know via email, and we will send it to you later this afternoon. Thank you for joining us and for your interest in this subject, and have a wonderful, wonderful rest of the day.
Thank you.
Thank you.